Good morning, traders. It's Thursday, June 15th. We're about an hour before the open. We had the FOMC statement yesterday. We're going to get into market analysis in just a bit, but the way that I conduct all these videos is to first review the previous picks, then to do some market analysis, then to find some new picks. That should help you get a feel for how effective this trading system is. So one of the last picks that we had Sunday evening was Tesla. I liked it on the long side, and you can see how Tesla broke through this downward sloping trend line. We also had a high plus trend line that was breached to the upside. Stock is above all the major moving averages, and the volume has been good, and that's a critical component because that tells us that there's institutional involvement. So, nice pick. We'll zoom in just a little bit so that you can see that the stock has been able to push higher. The market generally has been pushing higher. Again, we'll get into that in just a second, but favorable CPI and PPI reports have provided some upside fuel. I did provide you with one bearish pick in the last video, just in case there were some nervous jitters ahead of the FOMC, which there weren't. I liked SMAR on the short side, and you can see how this big gap down had follow through below this upward sloping low plus trend line, and the stock was able to breach the 200-day moving average. So got a little bit of follow through on Monday, but then Tuesday on that big CPI report, and then yesterday after the FOMC statement, you can see how the stock rallied off of this low, and now it's actually looking like it might fill in some of this gap and find resistance to the 100-day moving average. So it's got some room to move up to it. Still a fairly weak move. Not a good pick though. Call a spade a spade. Actually, there haven't been a lot of good shorts that have worked recently, and part of that is because of the market. The market has generally been floating higher, so let's get into some market analysis. I'm going to give you at least one bullish pick today, maybe two. That's the side of the market that we really need to be focusing on. The FOMC statement came out yesterday. You can see if we put the trend lines up that we've recently broken through a couple of major trend lines on the S&P 500. That is a significant high plus trend line there and another here. We've also had some high minus trend lines that the market has gradually been able to work its way through. This is bullish. We've also penetrated this horizontal resistance level, and we're currently making a 52-week high. Gosh, how can this possibly be happening when we've got such a bearish backdrop? We have a Fed that yesterday came out and said, hey, folks, we're going to pause. But the majority of Fed officials, voting Fed officials, are looking for two more rate hikes this year. So this is just a temporary pause. You said, I believe that this is the right course of action because we are closer to the end than the beginning. In the beginning, we had to hike very aggressively. We had to act very quickly. Speed was of essence. Now that we're closer to the end, we can start to pause a little bit. We want to see what the after effects are from all of our previous policy rate decisions. Let that filter through the economy so we don't have to be as aggressive. But yes, inflation is much more persistent than we had forecasted. That's why we had to move quickly a year ago. We still believe that it's stubborn. We do not want to make the same mistake that we made a year ago. And that's why we feel that we might still need to hike a couple more times. That's the takeaway that I got from yesterday's FOMC statement. Now, mind you, that's pretty dang hawkish given that the market is still pricing in a Q4 rate cut. He also said, forget about it. We're not going to see a Q4 rate cut. We're not going there. We really need to get inflation below 2%. And it's still well above 4%. So we had CPI came in, had a nice little drop. PPI came in minus 0.3%, which a zero number was expected. So it came in much better than expected. We've also seen some relief in China. they said their producer price index came in minus 4.5%. That was about a week ago they released that data point. So the general consensus is that inflation, albeit at a slower than desired rate, is starting to come in. I think that what the market's looking at right now is that the Fed is closer to the end than the beginning. Employment has remained stable. The economy is generally on solid footing. The bottom hasn't fallen out after the steepest rate hikes that we've ever seen in a short period of time. The economy has actually been able to sustain or weather those interest rate hikes. Nobody knew what was going to happen to the economy 6, 8 months ago when they started down this path. But now everyone's kind of taking a deep breath and going, you know what? What's a couple more rate hikes? We've already had 10 rate hikes. What's a couple more 25 basis point rate hikes? Is that going to be what sparks a credit crisis in the financial sector? Probably not. And yesterday, Powell did address the regional bank situation and their exposure to commercial office property. He said that in their analysis that there are some regional banks that are a little bit more exposed to commercial property and that those banks are going to struggle a bit more, but that in general, that risk is very well spread out across all the regionals and that he does not have any concern about a possible contagion, that there are a handful of banks that are very, very heavily invested in commercial property, which, by the way, I think is a possible concern because we're starting to see a lot of people work remotely. Commercial occupancy rates in the 10 largest cities in the US is below 50%. So half of that office space is empty. Regional banks are trying to shore up their balance sheets. They are trying to sell some of this commercial property debt to other banks, and they're having to do so at fairly deeply discounted prices. So this is a macro shift in the workforce, and it's going to take time to work that through the system. So in essence, the Fed chairman said, we're aware of the risk, very well spread out across many different banks, so we're not that concerned about commercial property causing a regional bank financial crisis. So, of course, he's not going to spill out gloom and doom. That would not be good for the regional banks. I feel that the market has taken all of this information into account, and what would normally be a fairly hawkish Fed statement was pretty well received by the market. So let's take a look at the 5-minute chart and see what happened after that FOMC statement, and we'll be able to see that initial knee-jerk, wow, this is bad news, and some follow-through selling through the low of the week. But then, almost instantly, the market was able to rebound. One thing that I've noticed over the years is that when the market is able to weather bad news, it's a pretty bullish sign. It tells you that buyers are aggressive. They're still looking to enter. And I felt that the market was particularly vulnerable on this FOMC statement because there's a very overcrowded trade, and that is shorting volatility. Let's take a look at VXX, and you can see how option implied volatilities, VIX would be the same type of chart, has absolutely plunged. That means that there's not much fear in the marketplace because option premiums are continuing to contract. There's not a lot of uncertainty. And you can see after the FOMC statement, another drop in option implied volatilities. So this is a fairly bullish event that's taking place. We're also starting to see some rotation into some of the laggards. And so let's take a look at IWM specifically. These are the small cap stocks, and you can see how small cap stocks really hadn't participated in the market rally. Most of the market rally had been concentrated to the mega cap tech stocks, the 10 largest tech companies, the QQQ, for instance, has been very, very strong, and that's what's been leading the market higher. But we haven't seen that participation on a broad scale. Well, now we're starting to, and you can see how IWM, the Russell 2000, has been able to break out through this horizontal resistance. It's above the 100-day and 200-day moving averages. It's been able to break through a downward sloping trend line, decent volume starting to come in. This is a risk on trade, and the very low option implied volatilities also suggest risk on. So now we're starting to see a bid across a lot of the laggards that have been pounded down. I view that as a healthy move. So I still would like to get through the summer without any additional credit issues. We had a couple of the largest bank failures in our history. So that tells me that there could be additional problems. The higher that interest rates go, the more exposed those banks are going to be. Jamie Dimon said a couple of weeks ago that he felt that most regional banks are not prepared for another 1% higher interest rates, and that there is going to be some pain there. So we've got a nice breakout. The volume has been okay, not great. Let's put up the 1.0 volume indicator, and we can see that it is above zero. Now, one thing that's going to inflate the activity and the volume this week is obviously big numbers, CPI, PPI, FOMC. Okay, so we're going to have greater activity than normal, but we also have triple witching tomorrow, Friday. That's also going to cause a lot of rotation and a lot of activity as institutions unwind their positions. So that's also inflating the volume. So let's see if we get some decent price action. My overall market assessment is that, yes, we have a fairly hawkish Fed, but this breakout is very, very nice. If we get any kind of pullback to shake out some of these breakout buyers in here to the 430 level, that's a support level that I would like to see hold, and then we bounce off of it. If we come down to this 427.50 level, which was the initial breakout, that's another support level where I would be a willing buyer. Now, the way that I'd like to see that support challenged is a gradual little drift lower, not a big red long candle that closes on its low. That would signify heavy selling and that there has been a material change in the backdrop, which, by the way, the ECB is expected to raise rates 25 basis points this morning. That's already kind of priced in. Europe has been a little bit soft overnight, down 0.4% on average, but Asia has actually been up by about the same amount overnight, so those two should wash. So the S&P 500 is down about 15, 16 points before the open today. So we're seeing a little bit of follow through on some of the nervousness yesterday on some of the comments by the Fed, but nothing too nasty this morning. So if we see gradual little drift down, tick down, maybe like something like this where you've got a little fall and then a bounce and then overlapping candles, this would not worry me so much, especially if it comes on light volume. And trickling down and testing that breakout would be fine. It would actually be a good entry point for longs. What I would not want to see is long consecutive red candles closing near their low. That would represent danger, and that would also flush out a lot of these breakout buyers. But if it's nice and gradual, that's not going to shake them out. And in fact, there will be some buyers who will be looking to buy that dip. So I like the market in here. I'd like another 2-3 months to pass. I'd like to see what the Fed does. I want to make sure that there aren't any big regional bank issues. But generally, I'm going to respect this breakout. And so that means that my mode that I'm in right now is when you get a gap down, like we're going to get this morning, we can expect that buyers are still going to be fairly aggressive and that we're going to get a nice bounce once support is established. So buy dips is the mentality that you need to be in right now. Don't chase. Wait for those pullbacks. And in almost every case, almost every day, you're going to see a pullback. And that's kind of what these tails under body represent, is that the market doesn't just go straight up. You know, you're testing here. You had a chance to enter early in the day. You had a pullback in here. You had a pullback in here. So let's take a look at a 5-minute chart and then let's zoom out because I really want to emphasize this point. I see so many traders, they have FOMO. They're like, oh my God, the market's higher. I just got to pile in. I got to pile in. So you get a nice gap up here, market rallies, and then look at that big pullback. You've got a nice pullback in here where you can get long. In fact, on the open, you hit a pullback. So you've got these dips. There's a gap higher, pullback. There's a gap higher, pullback. You have to buy these pullbacks. Here, yesterday, we had the FOMC statement coming in, but the market opened flat. Okay, when the market opens flat, you can be a little bit more aggressive because you're not going to see as dramatic a bid check as you would when you've got a gap higher. So when the market's been generally trending higher and you get this big gap up, you're going to have some profit takers. You're going to have a test to make sure that support is still there. Once the market passes that test and support is confirmed, in this case, you don't even fill the gap, you don't even fill half of it. All right, yeah, we're sufficiently satisfied that buyers are still there. Market rallies. So be a dip buyer. Do not chase. There's no reason to chase. The market is not in go-go lift-off mode. Fact that it's been able to shoulder relatively hawkish statement by the FOMC, I view that as kind of bullish. So got triple witching coming up. We should see some nice activity, some nice volume. I'm expecting to see movement this morning. Wait for support to form. Then start looking at your strongest stocks and take a position once you find that market support. And let's zoom back into the M5. And so what we're going to be watching for is tails under body. Let's go back. Yesterday, we had that rally right out of the gate. So you've got a little bit of a bid check in here, and then the market just starts to rally. We had that positive PPI yesterday morning, so I think that helped to fuel some of this early rally. But let's go in and take a look at what that support might appear like. And so here we've got a nice rally. Big gap up, bearish hammer off the high of the day. Uh-oh, we have a bearish 10P cross. This is where you know, okay, hey, you know what? I don't need to be in here chasing on this gap up. I want to be a buyer on this dip. So there's your opening price. There's your low of the day. We start to see some tails forming in here. This would be a good entry point for a long position. Start getting up here. We're starting to hit some resistance here. We've got some wicks up in here. Okay, this would probably be a good place for me to take some profits. Go back and take a look at another day. I just want to reinforce the types of market patterns that you should be looking for before you enter your long positions on stock. And so we'll go back one more day, take a look at that particular price action. Here you've got a gap up and a very gradual drop in the market. Mixed overlapping candles, you have tails. This is a sign of support. They try to knock the market down and it just won't go down. And so now you've got these tiny little bodied candles. This is where you want to start taking some of your long positions on the strongest stock. So you've gone through that bid check process. So this morning, what you'd be watching for is, I believe, that you're going to see some pretty early support. And we don't have a big gap down. We've got about a 15-point drop in the S&P 500. So that's not a major gap down, not a major overnight reaction. Overseas markets pretty good. I think you're going to see a pretty steady gap fill this morning. So you don't need to guess that that's going to happen. What you would wait for is a couple of nice long green candles stacked like this. If you see it, that's going to tell you that buyers are still engaged and that we're likely to see a gap fill this morning and that you can take action on some of your longs fairly early. If we start to see a gradual drift lower, just like I showed you, well, then be patient and wait for that support to reveal itself. So let that market come in, start watching for those tails, watch for that price compression, then you'll have a better entry point. We just don't want to see a 50, 60, 70 point drop today in the S&P 500. That would tell you, hey, you know what? Yes, I'm in buy mode, buy dip mode, but today's not that day. Today could very easily be a bearish trend day, and we could flush out some of the recent bullish speculators. So I'm going to be passive with my buying. What I want to see is support early on. I'd like to see a couple of stacked green candles. Alternatively, I would like to see this even more because this is just a gradual drift lower, a very wimpy decline that still tells me that buyers are in there. If I get this and it doesn't last more than, say, an hour, what it's going to present me with is an opportunity to buy and to join the longer term uptrend, market first. And that's exactly what we want. From this point on, given this nice breakout, if we don't see any of those long red candles on heavy volume closing on their low, then we operate under the premise that this grind higher is going to continue and that we need to be in dip buying mode. That's how you would day trade this. You can also start doing some short-term swing trades. I'm not doing any longer-term swing trades just because I want to see how things play out over the next couple of months. But yes, definitely, if you want to be taking call debit spreads on a short-term basis, trading weeklies, doing trades that span less than 2 weeks, yes, I still think that is a viable strategy, more so now than it has been back in here, where you had a nice little run up and then blam. Ah, geez, this is a killer for overnight swing trading because you start getting some nice price action, then the bottom falls out. So you get another little breakout right in here and everything looks so good and then the bottom falls out. Well, now we have some reassurances that we've got this major technical breakout and we've seen buyers are engaged, the volume has been picking up, and that these dips have been buying opportunities. So that's the mode you should be in right now. Be long, look for those dips. We have a couple of new features that I'm going to be showing you when we look for our bullish stocks. One of them is the new tables that allow us to very quickly identify relative strength and relative weakness. And another is the alerts that we can set. And I've talked about setting these alerts. Strong versus SPY is one alert that I really like using for day trading. We can also use it for swing trading. And we also have LRSI, which is an excellent indicator and can also be used to buy these pullbacks. So what you would do on a day like today is you would go through your very best, strongest stocks and you would start setting these alerts. So let's use an example, NVIDIA. NVIDIA has been a powerhouse stock. You can see how it just broke through technical resistance yesterday. So what you would do here is you would say, hey, you know what? NVIDIA is probably going to drop this morning, and we are going to take a look at that chart. There you can see, okay, nice big gap down overnight. This is pre-open trading. So I know that it's going to lose its relative strength this morning, and that is a drop from 433 to about 425 or so. So what I would want to be doing is I'd be wanting that LRSI to drop below 20 and then to rise above 20. So let's put that indicator up, and I'm going to first add the study so that you can see what that might look like. And I've used this a number of times in recent videos. So the way that LRSI works is that when you get these dips below 20 and then a rally above 20, that's your entry point. When it rallies above 80, and you want this from 20 to 80, by the way, this is what I look for. I want to see it get from 20 to 80 very quickly once it crosses over, because that tells me that this move is very, very strong. So now, once you're above 80, when it drops below 80, this is where you would exit the trade. So LRSI, very, very effective tool. Given that we've got a pretty nice big drop in here this morning, LRSI is going to go right back down below 20, and then we'll be waiting for LRSI to go back above 20. But as it stands right now, you can see as of the close yesterday, it was above 20. So I'm going to right click, I'm going to create an alert, and I'm going to select LRSI from the drop down. And what I'd like is a value below 20. So alert when LRSI M5 is greater than 20. Well, wait a minute, right now it's already above 20. Correct. So I'm going to add this, and then I'm going to add a condition that says first it has to go false, then it has to go true. And when this happens, I'm going to get an alert. I'm going to get a pop-up alert. So my point is, this morning, we've got the market is going to be pulling back fairly substantially. A lot of the stocks that we really, really liked yesterday that showed a tremendous amount of relative strength, that have been strong for the last few days or even few weeks, they're going to be pulling back. So I want that pullback. I want that dip. And then as soon as the market finds support, I want to start getting these alerts that the stock is starting to gain either relative strength or technically LRSI is starting to improve. That is going to give me a good entry point. And again, my notion is that the market is going to find fairly early support this morning. Buyers are going to surface. I want to be able to take advantage of that early dip. And if that scenario plays out, alert, 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 alert. I'm going to be managing my alerts and taking a look at the stock. I'll be able to reevaluate the stock, and I'll be able to evaluate the market at that time. So if I'm getting these alerts, let's say NVIDIA triggers, and hey, here goes LRSI, and it's back above 20, but the market is tanking, and now we're an hour into trading, and I'm seeing long red candles on their low on heavy volume, I'm not going to buy NVIDIA. I'm not going to trade against the market. The pattern I want is that the market comes in. I showed you the gradual drift lower, mixed overlapping candles, tails under body, signs of support. Okay, it looks like the market's getting ready here to find that support and to run higher. Hey, look at that. I just got my NVIDIA alert. NVIDIA actually looks good. It was able to find support at the pre-open low. It really didn't sell off much with the market after that. Now I'm getting my LRSI above 20 alert. This stock looks ready to go. This is a great entry point. It's a great entry point because it allows me to join the market, which is in an uptrend, which has recently broken out. That's good, and it allows me to buy a stock that has shown incredible strength recently. All the tumblers line up. Bam, I've got a great opportunity. So the beauty of these alerts is that they don't cost you any money because you don't have a position. They give you a window to reevaluate those conditions. And if the scenario you're looking for is playing out, that's your entry point. There's no emotional attachment to the trade. You're buying dips, and this is going to help you avoid FOMO. So let's go in and take a look at a couple of stocks. We're looking for that gradual drift lower in the market this morning. We may see a couple of stack candles right away because buyers might be a little bit more aggressive getting long this dip. Those are the scenarios that we want. And if we have that and we find a stock that's performed really well recently, we've got a winning combination. And so now I'm going to be using another feature. We're able to right click and add columns to all of our searches and watch lists. And what these columns show, the blue dots are relative volume. So we can see if there's a blue dot, that means the volume is heavy. If there's a blank space, it means the volume is below average. 5-minute, 15-minute, and daily are the choices that I have. And then we've got our buy signals across multiple time frames, 5, 15, D1. Those are just my choices. Some users may have different variables that they want to use. If we right click, we can edit columns, and you can see all the variables that you're able to choose from. We are going to be adding so many more variables, so you'll be able to make these exactly the way that you like them. And then we also have strength versus SPY across multiple time frames. Well, what I want to see is green across the board. What I'll be looking for today is that we get that market dip and I start having some of my searches. When I start seeing heavy volume and I see relative strength on a 5-minute, 15-minute, 30-minute basis, that tells me that, you know what? The market might have pulled back 15 S&P points. This stock is strong. It's continued to power higher. So, for instance, yesterday when we get that FOMC reaction, the first leg was down. I just showed you that. So when you're in these bullish charts thinking, hey, you know what? That support level held quite nicely. I want to be looking for stocks that are moving higher. Well, NVIDIA is going to be right in front of you, and it's going to be so easy to spot because you got blue here, you got green across the board everywhere. And so you take a position in NVIDIA, and the stock does that. Really, really nice stuff. What we're going to be doing is we don't know which stocks are going to perform real well, so we're going to be looking for stocks on a swing basis that might do well. I'm getting a little bit long in the tooth here, so I'm just going to go into green royal flush. It's a great search. That means that these stocks are on buy signals across all time frames. So let's take a look at what this list has, and AVGOs at the top. I don't really want to chase right now. This is a nice breakout. You can see big gap up, nice little bullish flag formation here, and the stock is gone and the volume is decent. So I like AVGO. I don't want to chase too much right now. NVIDIA is going to be the same way. So I'm just going to continue to click through a few of these and see if anything strikes a chord with me. And I know there's a stock that I like, which is Intel. And I like it because it's been a laggard. I mean, it is a semiconductor stock. The company does have a lot of issues. There are a lot of other big companies that are coming out with their own chipsets. But Intel has this nice D1 breakout above this downward sloping trend line. It's above all the major moving averages. It's been able to put in some nice lows. It's got good volume in here, and I'm not chasing a breakout at the high. I'd mentioned to you earlier that the laggards are starting to get some love right now because they have not run up with the market. And so we're starting to see some money flow into these names. And there's also a nice downward sloping trend line here that's been breached. So I like Intel. I'm going to take a look at the price action here yesterday, and you can see exactly what I was talking about. So you get your nice little rally up here. You could get all excited to buy Intel in here, but you're probably not going to spot it until right about here because it's got to get on your radar. And so it has to show heavy volume, relative strength, some type of technical breakout. Okay, so this is where you start getting excited and you start buying into it. Well, you've got this nice big dip right in here that you could have bought on that LRSI cross. Kind of the same deal here as you start getting this big, nice breakout here to a new high of the day, but you're going to get these dips. And there's another classic dip that happened yesterday. So these thick stocks with lots of volume, Microsoft, Apple, Amazon, Tesla, all of them have these dips. And so you want to be buying on these dips. You don't want to be chasing these breakouts. these breakouts get it on our radar, then we place the alert, then we wait for the dip, then we enter the trade. That has it's a very, very effective strategy, and you're going to see a lot of comments to that effect probably in this video. At least I hope my members do, because the ones that have been using the alerts have been doing very well with them. And so here's your entry point right in here. So I like Intel. I like this breakout. What I'm going to do right now is I'm going to add an alert, and I'm going to use strong versus SPY, and I'm going to use a 5-minute basis. And the stock closed on its high, so it had relative strength yesterday right into the closing bell. So I'm going to add this, and I need to see that condition go false and then true. So let's add 10SI to the chart. This is our relative strength indicator. You can see how on a 5-minute basis, 10SI was above zero. I needed to go below zero, and then I needed to cross back above. Let's do M5 and see what the stock is doing this morning. It also is pulling back with the market. Let's do the same thing with the market. Let's see if this sell-off has accelerated. Not really. So there's your little overnight drop, and here's a little gradual move back into this gap. I wouldn't read too much into the pre-open trading. INTC is a stock that I like, and that'll be one of them on our list. And you can see yesterday, green all across the board here. I'm going to look to see what else I've got. SPLK, we'll take a look at that. Not as compelling to me. I'd rather see a nice, solid, big breakout. And I'll take a look at Pop Bull, see what's in that search. NVIDIA, obviously, Pop Plus Bull. And we're starting to see a little bit of a bid in Chinese stocks, which is good. I'm just looking across all these to see where I've got these dots lining up from yesterday, because that's going to tell me that that stock is very, very strong. Baidu, I looked at it, didn't have any kind of big breakout on a D1 chart yet, but it's above the 100-day moving average. Very, very choppy price action in here. We're going to heavy buying, see what we had coming up there yesterday. Nike, you can see Nike has been selling off hard. It's trying to get through that 200-day moving average. A lot of the apparel and retail stocks, Target, kind of same deal there. Yesterday I did have FDX showing up on some of the charts, so let's take a look at that one. I'm going to stick with Intel. That's going to be your pick of the day. Spent a little bit too much time talking about the strategy that we're using and the new features, so I want to conclude this video. Intel's going to be your pick. We're going to be buying dips on Intel. We're going to keep our trades very short term. I believe that you're going to see continuation in this bounce. We've got a nice base here. We've got higher lows being formed and some nice technical breakouts. Been a laggard. I think it's going to get some love. You can see you've got relative strength and decent volume coming into the stock. So that is your pick. Sorry that the video came out on Thursday and not Wednesday, but I really wanted to see that FOMC reaction. I wanted to talk a little bit about what that means for the market right now. So I will be doing a video on Sunday, and then I'll get back into my regular Wednesday video routine. Thanks so much for watching, everyone. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.